Ladies and gentlemen, welcome to Man in America. I'm your host, Seth Holhouse. So I'm not sure about you, but for me, I wasn't taught the true history of the Federal Reserve in school. It wasn't until I found the book, The Creature from Jekyll Island, that I really started to understand the role of the Federal Reserve and how it's not actually a federal company, but a private bank. And we've learned to understand that the Fed has actually been the enemy of mankind, especially when we tie in its relationship with the central banks. But my guest today, Tom Luongo, who has an interesting background. So he's originally a research chemist that got into geopolitics and finance and was a writer for quite some time and still is. He runs a prolific blog named Gold, Goats, and Guns. But he also writes for Zero Hedge. He's written for Newsmax and a lot of other financial publications as well. And he has a theory and an idea about what's happening with the Federal Reserve and the central banks that will probably challenge your perception of what's going on right now. And I have to admit, this is a kind of just a wild perspective. But fundamentally, as you walk through the narrative with Tom and he presents the research that he's done, shows what's happening, talks about timelines, talks about how Trump was involved at a certain time, and he paints a picture about what's happening with the Federal Reserve and the central banks that's very interesting to say the least. I'll give you a quick warning though. He's not someone who censors his language, so he might drop a few F-bombs in our talk, but I didn't want to tell him to censor himself for the program. So just, if you have kids around, maybe, don't let them listen, but they probably won't be interested in listening to the history of the Federal Reserve and the central banks anyway. But I hope you enjoy this interview, folks. Before we get started, make sure you're following me on Telegram, Truth Social, and Gab at Man in America, and Twitter at Man in America US. You can also catch every episode as a podcast if you just want to listen. The links to the podcast and social media are all in the description below, or just search for Man in America in your favorite podcast app, and make sure you leave me a 5-star rating. It really helps me to reach more people. Also, folks, food prices are going up, energy prices are going up, gas prices are going up, and inflation's not going away anytime soon. So right now, the real rate of inflation is closer to 25%, not the 8% the White House wants you to believe. And look, you can see this with your own eyes and in your own wallet. What this means is that if you had $100,000 in your savings account just 1 year ago, today it's only worth about $75,000 in terms of your actual buying power. Your money is losing value by the day. If you went back to 1920 and you had a $20 bill or a 1-ounce gold coin, you could walk into a men's clothing store and buy an entire suit, jacket, shoes, pants, belt, everything. But think about it. What would a $20 bill buy you today? Some socks, a handkerchief? But an ounce of gold will still buy you that same suit. And this is why I believe that now, more than ever, it's a good time to consider transferring at least some of your wealth into physical gold and silver, real-world assets that stood the test of time. And for this, I'm confident recommending Dr. Kirk Elliott. So Kirk has 2 PhDs and is an incredible Christian patriot who's dedicated to helping you break free from the trap of inflation. You can buy gold and silver directly, even in small amounts, ship it to your front door, or you can transfer your IRA into physical gold and silver with 0 taxes or penalties. Look, Kirk Elliott is who I use, he's who my family and friends use, and he's someone I trust completely. And when it comes to your wealth, you need someone that you can trust. So to learn more, open up a new tab right now and go to goldwithseth.com or call 720-605-3900 to speak to a real person right now. Kirk Elliott's team will answer all of your questions and take care of you every step of the way. Again, that's 720-605-3900 or goldwithseth.com. All right, folks, let's jump into this interview with Tom Luongo. So Tom, thank you so much for joining me today. It's great to have you. I've heard a handful of your interviews, whether it was with SGT or Gonzalo Lira, and I was like, I got to get this guy on because you've got a really interesting and brilliant perspective. So thanks for being here today.
Oh, I appreciate it. So thank you for the invite, as always.
Absolutely. So why don't you just start, just give our audience a quick background of, who you are and what you've done and what's brought you up to where you are today.
Well, it's funny. Where do you start? How far back do you go? Do you go back to when I was a teenager reading Philip K. Dick and just eventually and realizing quickly that the world I think I see is not the world I'm living in? Or do we fast forward to when I graduated college and became a chemist and spent 25 years, analyzing water and soil samples and then eventually doing electrochemistry, metallurgy research for 5 years, and then woke up one morning and realized that I'm unemployable. Um, and then had to like, oh, that whole wanting to be a writer thing. I think I want to do that now. And then eventually, falling in with a guy over in Vietnam and learning how to read a balance sheet and do financial analysis and whatnot, and really up my game. I had always been a staunch libertarian and disciple of Austrian economics and all that stuff, but it was just a matter of honing that in and looking at it from the real world perspective as opposed to the pie in the sky one, which may happen one day, but no. So, and then eventually I got picked up by Newsmax and, writing a gold stock newsletter back in late 2013. And that relationship went on until about 2017, at which point I went independent, basically taking that same idea, transferring it into the real world and saying, well, I can get the lion's share of the revenue if I do it myself. So I think this is a good idea. I think this business model has already proven itself. It's just a matter of finding the audience. And now we're in the process of really finding that audience. So that's where I am now. And what I came to the conclusion of over the course of time was that you can't talk about markets in today's world without talking about geopolitics, because they are absolutely and inextricably linked. We live in politically dominated markets instead of bank-dominated markets. Therefore, the incentives and the wishes of those classes of people drive not only our politics, but the valuations of the marketplace. And, years of listening to Martin Armstrong complain that the world is about capital flow. And I'm like, eventually, it finally got through my thick head that Martin was correct about that. And I do always credit Martin for helping get that through my thick skull, because once I got there and then you start marrying that to the politics, after a while, it's not like you got the cheat code. It's not like you've got the code, you can see the code behind the matrix, but you have a better shot of decoding that code if you do that analysis, as opposed to just hiving yourself off into one discipline or the other. I'm a political analyst. I'm an economic analyst. I'm a finance guy. I look at structured loan products. Blah, blah. No, you have to look at it all. Yeah. And I never in a million, as Martin Armstrong said, he never wanted to become a geopolitical analyst. I never wanted to be a guy that analyzed credit spreads. Yeah. Like in a million years did I ever think that I would be a guy like watching credit spreads like a hawk. Yeah. But that's where my life has led me. Interesting. So that's where we are today.
Yeah, well, I'm actually, so I'll be interviewing Martin Armstrong pretty soon, which I'm like extremely excited for, which is fantastic. But you mentioned, looking at finance without looking at geopolitics, and to me, it's almost like a doctor that's treating you without asking you, what does your diet or your lifestyle look like? It's like, actually, I drink 12 cans of Coke every day, don't exercise, my heart has problems. He's like, okay, here's some drug to take.
You need a statin. Like, since my wife and I are both, we are keto at this moment in my life. I'm kind of keto adjacent, as opposed to having been hardcore carnivore, and I've done it all in the last 20 years. But I'm in a mode now where I'm smoking these French fries, and I'll pay for it when I'm 60, whatever. Someday, one of these days, I'll stop beating myself up and I'll, go on a 3-month purge and only eat steak for 4 months and get everything righted again. But right now, tomorrow could be bad. It could be really bad. And I'm like, smoke them if you got them. But I hate to admit it, but it's kind of where I am right now. So yeah, I think I'll have French fries with that hamburger. Sounds good. Yeah, we'll do that. Yeah. Terrible. Fried in soybean oil. Yeah, whatever. I can handle it.
Yeah.
No, you really can't. But
what's also crazy is I think a lot of people, they're taking financial advice, they're going to their financial advisor that's not even paying attention to geopolitics and just looking at, well, we were taught to recommend, these stocks and this way, these bonds, et cetera. And it's like, I talk to people I know and I'm like, well, like your guy's telling you, oh, don't touch precious metals, keep everything in the market and we'll move it over to here for you. And it's like, are they really looking at what's happening? They know what's happening with BRICS. Have you asked them about the petrodollar? Have you had these conversations? And it's just, it's just incredible.
No, actually. They haven't.
Yeah.
It's funny. I don't have a Series 6. I don't have a Series 7. Everything I say is not financial advice or anything along those lines. I'm just some asshole on the internet with an opinion. But that being said, I see my role in all of this is to help you and help people ask the right questions when they do go to sit down in front of their financial advisor, and their financial advisor says, no, I'm going to put you 60% in bonds and 40% in stocks. And they're going to, no, you're not. You're going to put me 35% in commodities, 25% in gold, 5% in Bitcoin, and 25% in blue chips. And the remainder in, I don't know, pick something that's not uniquely terrible in the debt markets right now. And they go, no, that's what you're going to do. And this is the reason why. And I know why. And that's what you're going to do. And if not, I'm going to take my business somewhere else. It's to give you that confidence and overcome their too easily given authority. Yeah. Like, we want to believe that that guy's the expert, right? But he really may not be. He's a guy with a mortgage just like anybody else. He's a guy with his biases just like everybody else. I make the point all the time that we've been living in, before this year, we've been living in a 41 plus year bull market in U.S. debt. Has anybody under the age of 65 ever traded a U.S. Treasury bond that wasn't in a primary bull market? The answer is no. And therefore, they don't know how to deal with what's happening right now, when now we've entered a primary bear market. And that will happen once we close this year above the 40-year downtrend line in yields. Now, not a big downtrend line, in terms of technical analysis. My patrons know this well. I rarely ever draw lines on charts. And if so, it's just to highlight horizontal levels of support and resistance. I try to keep my charts as clean as possible. Martin, on the other hand, likes to draw as many lines on charts as possible. But that's his gig. It's the way he sees the world. And I don't. But for me, I can't do that. I have to look at a very clean chart with almost nothing on it, and then let the candlesticks tell me the story. Yeah. But at the same time, and then I do agree with Martin that you always pull back in time, and you look at, and time is the most important thing. It's the interaction between time and price that creates the story. Right. And so when you see a chart like the 50-year chart of the 10-year U.S. 10-year Treasury yield, and you look at the big friggin' boner that we're putting on yields this year, and in terms of that bar, like, well, that should tell you something. I don't know much, but that means something, right? And you should, So even a novice technical trader can look at that and draw a line through all the highs and go, yeah, that's bad. Yeah. What does that mean? I don't know, but in the immortal words of Forrest Whitaker in Good Morning Vietnam, sir, I don't know what that means, sir, but it sounds profoundly negative.
Yes. Yeah. So, Tom, I think that for a lot of people, obviously, COVID has woken a lot of folks up. Like, well, maybe big pharma's not looking out for me, and maybe they're starting to question a lot more. And I think for a lot of people, they're now realizing, wait, the Federal Reserve isn't some federal agency that the government controls that is owned by the government. It's actually this giant private bank. And so there's all these realizations that people are going through in this process of really, waking up, you could say. And part of that is actually then looking at, okay, well, there's these central banks, and there's they create these debt slave systems with their fiat currencies. And it's this big process. And I know for me, in the process of learning this, it's a little bit overwhelming, and you feel like, wow, like they've been in control for like thousands of years, basically. Ever since.
I wouldn't go that far, but I'd certainly go back to the formation of the Bank of England in 1690.
1600s, yeah.
Modern finance was really built around that period in time. Neil Stephenson's Baroque cycle does a great job of his quote unquote historical fiction. It's the last decent thing Stephenson wrote before he became an irretrievable shitlid. But when he used to be a crypto anarchist, and he was good, and he was still a good writer. This isn't a book review either, but whatever. But the Baroque cycle is excellent, actually. Both that and Cryptonomicon. I heartily recommend those as like alternate takes on monetary past, present, and future. Right. But the thing is, it's that central banks, there's always a scam somewhere, right? The history of the world is that someone's always trying to scam somebody else. Everything always comes down to being a Ponzi scheme in some way. If it sounds too good to be true, it's probably because it is. If they're trying to sell you, And ultimately, if you have a wimpy economy, I would gladly pay you Thursday for hammer today, is really what we built, right? And most people kind of understand that, even if they don't understand it, consciously. They understand it back here because they know but they don't know how and why. But they know that there's something fundamentally wrong with the entire system. Now that then the question comes, well, who's got the best explanatory, mechanism? Personally, I think it's the Austro-libertarians. I think the Keynesians they're just weak-willed Marxists, and I think the monetarists from the Chicago School are just weak-willed Marxists with, that purport to be libertarians every once in a while. Purport to be free marketeers in that respect. So it was, for me, it was understanding that, and I started this journey in 2002, 2001, after, I lost a modest sum of money in the Y2K bust, in the NASDAQ bust, right? It wasn't a lot of money, but in the grand scheme of things for me at that point in my life, it was a lot of money. It took me a long time to pay that off, by the way. And so that thing became an obsession because that thing became truth. And now all of a sudden you got a little bit of political and economic truth for the first time in 30 years in your life, or 35 years. And you're like, okay, give me more, right? Like anybody else, when you finally, see a truth, you're like, and it now radically alters your perspective on everything you thought you knew.
Yeah.
Right. And of course, I've always been an iconoclast and always been willing to engage that at a very high level at every moment of my life. I've always been skeptical, but never, you always kind of worming your way around to try and figure out what's right and what's wrong. So when it comes down to the central banks, they create credit out of nothing, and they sell you your own labor to you back to you with interest. That's the essence of our system. So we're going to take you're going to take all your labor, and we're going to sell it back to you at prime plus 4, so that you can buy a house.
Yeah.
To live in, which you rent from the government in the form of property taxes, and you rent from the bank in the form of the mortgage. Isn't that great? That's the American way. Isn't that great? Isn't that what you should do?
Yeah, exactly.
No, of course not. Now, that's not to say that I'm against interest. I'm no Marxist. I like interest is fine.
Yeah.
But what's the foundational asset that interest is based off of? Well, in this case, it's your labor. Because that's what ultimately backs the full faith and credit of the bonds of the United States government, collected through income taxes and other excise taxes and all the rest of it. Capital gains taxes, all the rest.
Yeah.
But it's your labor. And then they sell it back to you, with a VIG. Like, good scam if you can get it, but that scam mathematically can't sustain itself forever. So
yeah, and that's why that's your perspective. I've heard on a handful of interviews. It's that which is really interesting, is that this kind of debt-based fiat system is coming to an end, and what you're seeing is something that I think that not many people are bringing this up in talking about. For me, when I look at the Federal Reserve, I've always looked at the Federal Reserve and thought, okay, well, the Federal Reserve is owned by the central banks, and it's just another tool to oppress us. But what you've brought forth is a very different narrative, which really kind of paints a picture of some serious fighting going on, which that's also something I believe.
I know you're trying to prompt me to go towards the Fed versus Davos thing, and I just want to make sure that we got all our ducks in a row up front to understand where I'm coming from, because I don't know where your audience is, and so all of that.
Perfect.
So here's the thing. So in the standard Austro-libertarian critique, central banking is evil because all fractional reserve banking is evil. Therefore, and that's usually where most people, they get it and then they stop and they go, cool, I understand how the world works. Well, sorry, young Padawan, it's a little bit more complicated than that. Everybody still has their incentives in play. And the real world is far more complicated than that. But yes, you're right. At its core, you're being scammed. They're selling your labor to you back to you with interest, and you're buying it. And that's the sad part. My dog agrees with me. So what you have to realize is that in the hierarchy of the power structure that exists around us, who's got the most power? who's trying to take power from somebody else, where do they all fit at that table? Because we're not sitting at that table. We're down here at the kids' table at Thanksgiving. At the bank, 4 or 5 tables down, deciding on what's going to distribute it to everybody. Okay. That's what you have to realize. And who gets what cut off the prime rib. Whereas, we're Oliver Twist going to, feeling guilty for asking for a second bowl of gruel. And we should be thankful for it. So once you start looking at the world from that perspective, now everybody has to do their own SWOT analysis, SWOT analysis, the standard financial thing, strengths, weaknesses, opportunities, threats. Well, let's focus in on the threats, because the threats are all that matter here. Because as the system comes to a screeching halt, everybody's future business is under threat. And threats become far more important than the S, the W, and the L. The T is everything. Because then once you understand who the threats are, then you can understand how people are going to deploy their strengths, minimize their weaknesses, and take egregious advantage of their opportunities. So now let's look at what does Klaus Schwab and what does the European Union want? Well, they are clearly fourth industrial revolution, and which is a very specific definition on their terms. When Putin, for example, uses the term fourth industrial revolution, he means something completely different. FYI.
Can you repeat that one time? For some reason, you cut out just there.
Okay. So the term fourth industrial revolution, when Klaus Schwab uses it, he means, transhumanism, putting plant chips in our heads, mass surveillance, Minority Report with more Germans. When Putin talks about it, he's talking about like the next iteration of industrial capitalism. Okay? Completely different thing, where technology will free humanity from toil, not enslave it through mass surveillance.
Technocracy. Yeah.
Through technocracy. Okay? Now, Schwab would never say that's what his plan is. But if you listen to him very carefully, he's saying we don't have any other alternative. This is what you're going to have to accept if we all want to survive. Well, you don't even want us all to survive, because you're a documented eugenicist who believes the global population should be between 1 and 2 billion people. So what do the other 5.2 billion people do? I guess they starve. But let's not talk about that. So when I look at this, that's what they want. They want a retail central bank digital currency that's programmable through smart contracts that they can then use by which to define the parameters of your life based on your behavior and their judgment of your behavior as to whether it's in the greater good of the society or not. You don't have a say in this matter. They do. And they're going to turn it all over to AI, which is why I keep invoking Philip K. Dick's Minority Report, because all you have to do is replace the precogs from that movie with AI, predictive AI algorithms, and you have the same thing. Okay? So they want that. In the world today, we have a 2-tiered monetary system. The central banks, the Treasury issues some debt. The central bank effectively, the market may buy some of it. The central bank puts some of it on their balance sheet, and then that money pushes into the commercial banking system. The commercial banking system then levers that up and then sells that money to us. And there's 2 tiers that goes from the central bank to the commercial banks, and then from the commercial banks to retail. Right? Just think of it as two interlocking gears, running at slightly different. They may have slightly different, gear ratios and whatnot, but they are what they are. And the gearing is actually the best example of this, best metaphor for this. That system of how money translates, depending on the direction of the way the gears are going, depends on whether or not we're going to have inflation or, right? If it's going backwards, we're going to have deflation. And when the Fed pulls back, then all of a sudden the whole system at least slows down. The gears turn slower, and therefore growth is slowed, possibly even goes into reverse. Schwab doesn't want that. Schwab wants to take out the commercial banks and just collapse everything so that you are now a customer of the central bank that he has complete control over, or the people he represents have complete control over. Salt your, put on whatever tinfoil hat you want. I happen to use, but if you do make a tinfoil hat, always use Reynolds heavy duty. Don't go for imitation bullshit. Do it right. Or do it right or get out.
I use Reynolds heavy duty with mine. It's
absolutely
3 layers
thick.
thick.
Good.
Yeah.
Then absolutely, Seth. Then we can continue having a conversation, because otherwise you're just opposed. So kidding, dude. Seriously. So freaking tourist. No. So, but that's what Schwab wants, and he wants to cut out commercial banks. Well, who's owned by the Fed? Who's the Fed owned by? Is the better question.
Because I've always thought the Fed was owned by the central banks. And so I thought, the Fed's completely controlled by the central banks.
No. Oh, they were all in cahoots together when they could keep levering this system up and making and extracting blood from us. But now we're all stones and there ain't no blood left. Now they got to turn on each other. Or they got to morph the system into something new where they can't lever up debt anymore. They now just have to lever up tokens.
Yeah. Which can be done
central bank digital currency tokens are no different than all of the bullshit stable coins and bullshit crypto that we've seen over the past 5 years, which, by the way, the more we get by the very who created this old system.
Sorry, Tom, can you repeat that one time?
In order to destroy the validity of Bitcoin itself and any proof of work Bitcoin style coins. Okay. The Bitcoin maxis get angry with me when I include the privacy coins, because, well, guess what? Until Bitcoin has real privacy, which it doesn't. Fuck you. Like, seriously. So, but again, a much more esoteric conversation for a different day, certainly probably even a different decade. And I think that the Bitcoin maxis are well ahead of themselves. Well intentionally, by the way. I think they have all the best of intentions, but they're still way ahead of themselves. Because what's important is to understand that they want to, the ultimate goal with the next iteration of this is it's always about further separating the creation of new money tokens from the value created by human ingenuity. If you can do that and skim a vig in the process, then that's real power. Right? So, yeah. So, it's not my lawyer calling. It's not the FBI, so I'm not going to answer it. So once you understand that's why the move to central bank digital currencies, because in order for them to have their more perfect technocratic union, known as the European Union, and then eventually given all that power up to the UN and the Bank of International Settlements or the IMF, pick your poison as to which one will be the issuer of the global, credit unit of credit. That is the ultimate version of in order to make that work, you have to have total surveillance. You have to have a central bank digital currency in order to be able to make the technocracy work. Because otherwise, people will just cheat the system. They will have other ways of trading. They will have other alternative currencies. They will have, barter, this, that, and everything else. And, we have to control 99% of the real capital in the world. If we don't have that much, we will never be able to, because their argument at this point is literally the Chinese and Russian communist societies of the 20th century failed because Europe and the United States weren't also communist.
I see.
That's what they mean when they say they weren't really commies.
I see. It's always the problem with communism. It's never that communism is bad.
It's like
some other reason why it failed.
You run out of other people's money. Everybody has to be on board with communism. And then if you're a true believer, then eventually you go down the purity spiral where you start killing all the non-believers. Yeah. Because that's what you have to do. Because power not only makes you stupid, it makes you paranoid that someone's trying to take your power from you. So it makes you stupid because you use it indiscriminately, creating the opposition to your rule that is inevitable, that then feeds your paranoia, and it's just a self-reinforcing, spiral into psychopathology and murder, and the murder becomes justified. So That's what Schwab wants. What do the commercial banks want? Did anybody ask them?
So commercial
do you
banks
really
being
think this? I
JP
asked a
Morgan
very simple
Chase.
question a year ago June, to some people that I know who are patrons of mine, who are who are in the financials, who are hedge fund managers and people who are professionals. And I said, do you really think Jamie Dimon is going to turn the keys over of JP Morgan over to Klaus Schwab and a bunch of Eurotrash commies? And they went, hell no. I'm like, okay, now let's look at why did the Fed raise the reverse repo rate by 5 basis points and the euro dropped by 3% in 2 days? What does that mean? Seems big, right? Like it's just like the big boner in yields I was talking about earlier. I don't know what that means, but it seems bad.
Something. It's there.
Yeah, okay. It meant something. And now you have to start doing the back analysis. And then I put together some stuff that Martin Armstrong had said about Schwab, cutting out banks, and I heard some other people. I put that together, and I just went, "Oh, clearly the Fed is at war with Davos because they're going to protect the commercial banks, and they got to stop the ruinous spending on Capitol Hill because the fiscal policy of Capitol Hill binds the Fed's hands into monetizing debt that can't be sold on the open market. The Fed doesn't; it's against the Federal Reserve's charter to not buy the excess debt. They have to buy it." And the primary dealer banks have to buy the debt at auction, whoever doesn't buy it. In order for the primary dealer banks to continue being primary dealer banks, by definition, whatever the open market during a treasury auction doesn't buy, the quote unquote indirects, the primary dealers, have to take down. So when you read some cryptic post on Zero Hedge about a sterling 7-year treasury auction, and they go through bid to cover and indirects and directs and all this stuff, I didn't know what it meant for the first 2 years I read Zero Hedge. Eventually, I grokked it, just through repetition and time. And, oh, that's what that means. And then putting it all together and just staying in the moment and staying, doing 60 hours of living in this world a week until eventually you get good at it. Not because I'm uniquely brilliant or anything. This is just all hard won. This is just all, I put in my Malcolm Gladwell 10,000 hours behind the scenes. And now it's all paying dividends now. It's really what it comes down to. Anybody, honestly, if they do the time, they can get where we are. It's not that hard, right? Because all the information's out there. Now the question is, you just listen to the people who can get you up to speed quickly. So it's what I'm trying to do today. And I know I'm jumping all over the place, but it's important. So just understand that with the Fed is not motivated by what Klaus Schwab wants. They're motivated by the exact opposite of that, to preserve what they currently have. Who's the most powerful central bank in the world? The Federal Reserve. It's not the BIS. It's not the IMF. They LARP as being more powerful than the Fed. They're not more powerful than the Fed. But they're also both under control of Klaus Schwab and the World Economic Forum and the people that he represents. That's why the taking down of Dominique Strauss-Kahn back in 2011 and installing Christine Lagarde as the IMF managing director was the shot across the bow. That's the beginning of this. This beginning of the takeover of the Western global financial system by Europe. That was the turning point. Because you put Lagarde in at the IMF, and then you move her out to the ECB after you move Draghi into the prime ministership over in Italy, and then you move Kristalina Georgieva into the IMF. They're all owned by Schwab. Every one of them. Austin Carstairs over at the BIS, owned by Schwab. Blah, 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 blah. They're all there. It's all obvious. Jay Powell, on the other hand, he's not. Jamie Dimon hasn't gone to Davos since 2020 or 2019.
And Jerome Powell, he was put in under Trump. Is that correct?
Mm-hmm. Yep.
And was that a turning point?
Who gave him Jerome Powell? Dimon, Lloyd Blankfein at Goldman Sachs, all the banks that I've identified, they wanted him. And they also wanted John Williams at the New York Fed, and they wanted Judy Shelton at, I'm not sure which Fed head they wanted her. They wanted Judy Shelton, the old gold bug. Right? Judy Shelton has literally argued for the return to the gold standard. like an Austrian would. So Austro libertarian would. So it's very interesting.
So there
And
was
it's at that
just
moment,
to kind of catch up with this. So
sure.
there was a turning point when basically these big the commercial banks that we're familiar with, right, the JP Morgan, et cetera, Jamie Dimon, who's CEO of JP Morgan, that when Trump got in, they in a lot of ways handpicked their guy, Jerome Powell, who Trump then put in charge. And that did you see a shift in the monetary policy coming out of the Federal Reserve?
If you go back, I wasn't aware. I wasn't thinking about it at the time. I was firmly in the, the Fed sucks mode. I wasn't off the Fed. I wasn't off that mode until the middle of last year.
I see.
I didn't catch this as it was happening.
I see.
So, no, I'm late to the party like everybody else. Again, once you see, because the Fed was doing everything that they were doing everything they always had done in the past. They always bailed out the market. They always did. I didn't see anything really different under Powell that I saw under Bernanke and Yellen. I saw more lip service to wanting to do the right thing.
Yeah.
But I also saw Trump, the old mercantilist that he is, and the old, shitbag property developer from Queens that he is, that he likes debt. And he wanted more debt and he wanted more spending. And Powell's like, no, we need to rein the spending in. But, Powell complained about the CARES Act. He said, it's a terrible idea. This is bad. We shouldn't be doing this. Nobody listened. Everybody blamed the Fed for the CARES Act, blamed the Fed for expanding its balance sheet. Like, do you not understand how this works? Congress spent the money. Congress gave BlackRock access to the Fed funds window. Jerome Powell didn't. Don't blame Powell for something that Nancy Pelosi and, Nancy Pelosi and Mitch McConnell did.
So basically, it looks like that the Federal Reserve, which is in large part owned by these larger commercial banks, right, that we're familiar with.
They're all shareholders. The major New York banks are all primary shareholders in the New York Fed. The San Francisco Wells is a primary shareholder of the San Francisco Fed. Blah blah blah. Right? These are private banks, they're private institutions in that respect, but they're also sanctioned by the government because there is no bank in America that is not a corporatist entity in the sense that it is only allowed to exist if it exists within the corporate charter as set out by the U.S. government.
I see.
Okay, like the federal government regulates all banking. Now, it's the main regulator is the Federal Reserve. That's been doled out to the Federal Reserve. That ultimately that power has been offshored effectively to the Federal Reserve. But it is what it is. Like, so there's just a lot to understand here. That at the end of the day, I'm not saying the Fed's a good guy. Like, I'm not saying the Fed's operating at this point. If they're at war with Davos, they're doing it for their own reasons, which that reason is survival.
Yes.
Okay. I'm not saying that Powell has our best interest at heart. I will say that I think that compared to Klaus Schwab, that Powell and Diamond and all the rest of those guys would rather have real risk assessment done by the commercial banking sector than have it set to the central banks. And we can get into the esoterica of this as far as SOFR versus LIBOR and the new debt indexing and what that could represent in the future. I have some very nascent thoughts about the potential re-regionalization of the Federal Reserve's interest rate policy. I think SOFR gives us that opportunity. The SOFR, for those in the audience that don't know this, is the secured overnight funding rate, which is the new debt indexing rate for all debt issued in the United States. We used to be issued vis-a-vis LIBOR, either as a premium or a discount to LIBOR, the London Interbank Offer Rate. LIBOR has been cut out of the American banking system. JP Morgan started cutting itself out of LIBOR, like the SOFR got out and put it in pilot status. Bob Williams at the New York Fed after he was appointed there by the Senate and Jerome Powell. They were both installed. They were installed to implement SOFR. SOFR had been on the book, had been developed and ready to go as far back as 2008 when Powell was just a junior member of the FOMC. Okay? Don't kid yourself. This is a big deal. SOFR was something that Geithner and Bernanke and Yellen and all that they did not want to happen.
So can you explain
They
how
wanted to keep us. What's
SOFR
that?
coming in? What like that? That's a little bit over my head. So SOFR,
Mm-hmm.
what does SOFR
This is
represent?
actually not very difficult, Seth. It's actually
Okay.
not really quite hard. It's actually really quite simple because I hadn't given this a second thought until I had a patron like contact me out of the blue, and we sat and we chatted about it, and he explained it really quickly, and I went, "Oh, that's what that means." It's actually really not hard at all. And I think I did a credible job of doing this. I've explained this in the past. I think I did a credible job of it on Gonzalo's podcast that I did, but we'll start there. It's really simple. In all previous to SOFR, all of our debt was indexed to LIBOR. LIBOR is a agreed upon rate by the 18 banks that make up the LIBOR panel. They call each other at the end of the day and they say, "What have you been trading at the money markets on your bank? What's money been going? What's the interest rate over there?" Oh, and then they just set a rate. Now, that's the way they had to do it 100 years ago because, the communications technology being what it was 100 years ago when the LIBOR was instituted, fine. It stayed in place for over 100 years.
So
They never
LIBOR,
developed a market rate for LIBOR. It's an agreed upon rate.
I see. So LIBOR is kind of an old school way that all the banks agree upon what they're
going to lend money at tomorrow,
selling debt at, basically, or lending debt at.
What they're going to lend dollars or euros or a British pound sterling or Japanese yen or whatever. And that's the way it was always done. So LIBOR. Now here's the gig. Every time the Fed tried to raise interest rates in the past, the Fed would always pivot well before they ever got to the quote unquote the proper terminal rate. Because what would happen? In the offshore dollar markets swamp in terms of size the domestic dollar markets. As big as our domestic dollar markets are, they're nothing compared to the offshore dollar markets, known colloquially as the euro dollar markets, but they exist everywhere.
So
Cayman Islands.
Meaning basically that, you have the money that is being lent to
dollars sitting in offshore accounts.
But this is all the money that's outside of America, right?
This is all the dollars that we've exported over the years. Okay. And then they get levered up because they sit on bank balance sheets and the banks lend them out.
Okay.
Yeah, the banks and they sit on bank balance sheets and guess what the banks do with them? They can lend them out. And they gear them up 10, 12, 15, 20x, right? So when you start to think about that, the size of those markets dwarfs the domestic markets. So when the Fed starts to raise interest rates to deal with an overheating domestic economy, what happens to the offshore dollar markets? They collapse quickly because you've now slowed the gear too much and they're overgeared and they're too big and they start to go into reverse. Now, usually it just hits emerging markets. That's why we had the long-term capital management and the Asian debt crisis in the late 90s. That's why we've had other ones. They've always happened overseas, right? Thai baht would blow up. Even the Australian dollar would blow up. Those things would happen, right? Argentina, blah, 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 blah. But this time, so when they catch a cold, and the euro dollar market's set to catch a cold, and as Jeff Snyder has rightly analyzed, when the yield curve on the euro dollar futures curve would invert, the Fed would have to pivot. Because once a yield curve inverts, it's not right. Interest rates, the longer the term of the debt, the higher the interest rate you should get for lending your money out.
And what is the Fed?
Because you're taking on more risk, so you should get rewarded more for it. When the thing rolls over, and in the euro dollar futures curve, what it is a forecasting mechanism for when the Fed is going to stop raising interest rates.
That's pivoting, right? Like it just
pivoting there, and people use the euro dollar futures curve and where it inverts to say that's when the Fed's going to pivot. And in the past, that's always had the ability to basically tail wag U.S. monetary policy because they would get into trouble overseas. The demand for money in the future would start to rise and force an inversion because yields go down, prices go up. People are demanding money a year from now higher than they're demanding money 6 months from now. That means that in a year, everybody's balance sheets are going to blow up, and therefore they need money then because they have liabilities come due, be it bonds to pay back or whatever it is, right? They have a massive demand for dollars out in the future. Therefore, they get into trouble. And guess what? Doesn't matter if our banks are in trouble. LIBOR goes up, which, by the way, becomes a self-fulfilling prophecy that our banks get into trouble because now no one can pay the new rates on their adjustable rate mortgages because they're all indexed to LIBOR. So Intesa Sanpaolo in Italy gets into freaking trouble, or Unicredit or BBVA or Santander or Barclays or Northern Rock get into trouble, and guess who pays the price? You do. Your adjustable rate mortgage goes up, your HELOC goes up, your car loans go up, your credit card rates go up, all of that stuff, which then becomes a self-fulfilling prophecy that you stop paying on the debt, and then our bank's getting into trouble. And then the Fed has to pivot. Well, now, if we're not tied to LIBOR anymore, and we have our own debt indexing rate, that doesn't happen. Because these rates are now independent from each other. The U.S. rates are completely independent now.
Oh, I see. Okay.
Of LIBOR. And up until 2022, LIBOR ruled. But the Fed rolled out SOFR over a 4 or 5 year period, introducing it into different aspects of our money markets slowly. And then on January 1, 2022, all new debt in the United States is indexed to SOFR. None of it's indexed to LIBOR. SOFR is a secured rate. It's a market rate. It's a massive thing.
I see.
It's the most momentous piece of financial news in the history of the United States.
Yeah, probably very few people talked about it, I'm guessing.
No one even understands it.
So basically, if I understand,
that's serious. I'm speechless. The more I think about it, I'm like, because what it became obvious to me was that London and the Bank of England and the British Crown and the Germans and the French have been using the Eurodollar system to control U.S. monetary policy, U.S. fiscal policy, and U.S. foreign policy. The Brits never gave up control of our banks.
Because of that. But by introducing, is it SOFR?
And now they're pissed off.
Is it SOFR? Is that how you pronounce it?
Yeah, SOFR, SOFR.
Okay, but so that's significant because that is the Federal Reserve saying, "Look, we're now decoupling our trailer from you, and we're going off on our own," which now means that we can. You've always used debt to enslave and control our system. But now we can invert that, and we can now use it against you because we can
drain the offshore dollar markets without necessarily draining our markets at the same rate. They're both getting drained.
I see.
But this one's coming down faster than the other one is, and that's why everybody's screaming.
So that allows.
That's why everybody wants the Fed to pivot.
I see. Because the Fed can now weaponize against them.
Growth. Oh my God. Like there's all of these friggin' snowflake millennials who've never actually, sorry if you're a millennial in the audience, but I'm really angry with them for voting the way they did last week. Because they don't understand anything because they can't find it in a Google search, but that's just me being churlish.
Yeah.
The reality here is that they're all talking their book because they all know they're going to go bankrupt. Okay. Old colonial money from Europe is now finally, for the first time, now not in control of the wealth generation engine for the world, which has moved around, used to be in London. Now it's in New York. And now they're not in control of New York anymore.
This is okay. This is just, it's all clicking for me now. It's like, okay, since 1776, the British Crown never really gave up their pursuit of controlling America, and they've controlled us almost entirely. Even though we had a revolution and there's some break off, they've been, we've been a colony of England for almost since the inception. That's a whole different.
Remember this: who backed the South in what we call down here the recent unpleasantness, and what everybody else calls the Civil War? The British Crown.
Interesting.
Who backed the Union? 3 guesses.
British Crown? Oh, no, sorry. No. Okay, the South was...
They're backing the South to break the United States up.
Who was it Russia?
Who helped Lincoln get through the Civil War? You're going to be... If you don't know the answer to this, when I say it, all of the 20th century is going to make so much more sense to you. But take a guess.
Russia?
Bingo. Peter the Great backed Lincoln in order to keep the United States into disrepair.
Sorry,
so that then it could be carved up by the British Crown and the old European colonial powers.
So this is a
and they've never forgiven the Russians for this.
This is a centuries-old feud between the European central banks and the Eastern,
And
aristocracy and the
And the
oligarchs. And I see. And
Remember,
America has been.
you know what? Do you know what really clued me into this? You're going to laugh when I say this, but I was watching Sherlock. The BBC version of Sherlock with Benedict Cumberbatch and Martin Freeman, or Bandicoot Curmudgeon, is what I like to call him. And I'm watching this, and I'd never actually read Conan Doyle. And I've never actually watched a good faithful interpretation of Sherlock Holmes before that one. And there it is. There's how are we introduced to Watson? With an old war wound, having just got back from Afghanistan.
Interesting.
The Brits were at war in Afghanistan the same way that they got the Russians involved in one, they got us involved in one, because the Brits don't want anybody controlling the world island. And so they've been mucking with Afghanistan for 150 years. It's been a primary focus of British foreign policy by direct or by proxy for 150 years.
So what we're witnessing here is so okay, let's go
back
to
the end of the British Crown.
Exactly. Yes. So since the 1600s, which we discussed, they've used their banking system to control the world, right?
To build the British Empire.
And
why did the sun never set on the British Empire? I've said this many times in recent podcasts, because God doesn't want these people running around in the dark.
Interesting. And so basically, through what happened in January of this year, it's like it's almost like they had a cage or whatever it was. They
had a back door.
Completely
they
controlling.
Had backdoor code.
Yep, our financial system, and they kept us in check. We cut that off, separate ourselves. So now, because before, if we wanted to kill them, we'd kill ourselves in the process. Yep. But now,
and Trump meeting with the Queen. Remember when they all lost their minds that Trump was going to meet with the Queen?
Oh, yeah.
Because Trump understood this. Trump knew what he was doing. Trump understood what Brexit was all about. Brexit was actually a statement by Liz that it was time for the British and the Americans to make peace and to stop being in charge of and allowing Europe. We have to allow the Americans an equal seat at the table.
So basically, Trump, in a lot of ways, who's very much the strategist,
Trump didn't really understand most of this stuff.
I see, but it was
Trump was handed Powell. He complained bitterly about Powell about not giving him the money he wanted. Trump did not understand a lot of this, but I think eventually he came around to understanding that Brexit. He understood that Brexit was important. He understood that the relationship between the British Crown and the United States was important. There's a number of different ways to read this. My read is I don't have any love lost for the House of Windsor, but I do think that Liz understood that there was a way to salvage the UK so that it did not get subsumed by what was happening in Europe, which was the relentless march towards unrestrained communism, where they were not going to have a seat at the table anymore.
I see.
And that they were going to be destroyed. So, in Liz's position, she makes the best deal she can. She backs Brexit. She allows Brexit to happen as best she can. She's being knifed on all sides because the British civil service, the British aristocracy, City of London, most of City of London, some of City of London actually wanted Brexit, and others didn't. Same way that most of Wall Street wants what the Fed is doing, and some of them don't. And so they're playing footsie with Klaus Schwab. Understand that the factions are very, very, they're not as simple as Wall Street, City of London. They're not monoliths. They're not monoliths. Like there are some on the right side of history. There are some on the wrong side of it, yada, yada, yada. And everybody, there are quislings everywhere. I mean, everybody makes their choice. So you have to be willing to be flexible in your analysis on these things of the individual actors at play and not use, well, I found this guy means that if BOFA's not on board with it, that means then your whole thesis is nonsense. I'm like, shut the fuck up, Spurg boy. Okay? That's not the way the world works.
Yes. Okay. And so basically, so then right now, and this just frames everything that's happening right now. So now that we've really gotten the ducks in a row, we've laid the foundation for what's happening right now. Are we seeing actions of the Fed that are causing a collapse of the central banks? Is that what we're witnessing right now? And is that why the central banks are in this panic to rush towards this central bank digital currency? It's not ready yet because they're trying to escape the attack of the Feds that would collapse their currency system.
What I'm seeing is that everybody who is aligned against Davos has forced Davos to up their time schedule. So we were going to have the Ukrainians attack in mid-March, maybe late March. Putin went first, threw their entire schedule off. We can argue. I don't want to argue whether he's done a good job of running the war or a bad job, doesn't matter. He just knew that at some point he had to go. Because now Zelensky was talking about getting nuclear weapons, and he didn't have any choice. And he certainly had credible intelligence that NATO was going to, give the green light for the Ukrainians to attack the Donbass sometime in March. He had to go when he went. Okay, right or wrong, he didn't have a choice.
Yeah.
Same thing here. The Fed actually wanted to do all of this before COVID. J.P. Morgan was draining the repo markets of collateral all during 2019 by refusing any European sovereign debt as collateral for repo contracts all during 2019. He was denying them access to U.S. treasuries, denying them access to it, and to dollars, and repoing a bond to get dollars. They were denying them that. Now, not every New York bank was doing it, but Morgan was, and Morgan was the biggest player in the field, therefore. And that's eventually what caused the SOFR blowout, which caused the Fed to have to step in and reopen the repo window. We had the repo crisis of 2019. That's fine. That was actually part of if you really stop to think about it strategically, that's actually the right thing to have happened at that moment in time, and for the Fed to step in, which also means that if you play out the scenario, when the Fed steps in like that, the market's going to give the Fed about 6 months worth of a halo effect for them stepping in. And if they don't fix anything, the whole thing was going to blow up in April 2020. Well, guess what? Guess who was going to get screwed by that? Well, it was going to be Europe, because the Fed was bound and determined to start raising rates again. Because in the interim, Powell had shored up liquidity within the U.S. banking system and gotten all the major U.S. banks to go, oh, by the way, we're getting ready for this. So guess what? COVID. What was the proximate cause of the financial meltdown in 2020, March of 2020? The proximate cause was on a Friday afternoon. Putin and OPEC Plus said, you know what? We're not cutting production. And oil, that happened late on Thursday afternoon or Friday, and by Monday, the price of oil had dropped in half.
I see, because
crushed the oil markets to then create. I don't know if my connection is stable or not. They crushed the oil markets to start the cascading defaults within the collateral chains, which then threw everything into a tizzy. And it was a massive shit attack on the financial structure of the world. Frankly, from my perspective, it was a false flag, because nothing that was said there was necessary to take the price of oil down by 50% over a weekend. I've been watching oil markets for 25 years. I'm sorry. And how nobody saw this as important. I saw it and I went, this doesn't feel right. I don't know what this is, but yeah, this looks bad. But why is this bad? And at the time, I praised Putin for doing this, because seriously, he was right. Like, no, yeah, let's take the price of oil down. You're going to start, because we're saber rattling about war and this and that and everything else that's going on. They were screwing with the Russians in other ways. I'm like, no, we have the oil. You don't. You're issuing debt. No, this is what we're doing. And they have the price of oil. And it was all about COVID. And COVID was, I'm firmly convinced, among the other things that it did, and gave them a crisis of opportunity, or opportunity in a crisis. It gave them the opportunity to force the Fed to monetize trillions of dollars in debt that we couldn't afford, because they got Congress, or they got the Republican Congress under Trump to spend money in a way that you would have never gotten them to spend. That forced the Fed to put $5 trillion or $4 trillion on its balance sheet and bail out everybody behind the scenes, and for everybody to write whatever nasty grams about the Fed that they like. Oh, you're bailing out the banks again. I got to listen to Pam. I got to listen to Pam and Russ Martins over at Wall Street on Parade said the same stupid shit that they've been saying since 2008. And I'm like, yeah, no, that's not what's going on here. Look at what happened. The Fed didn't bail anybody out. The Fed got completely.
So you think that in a lot of ways, COVID was an attack on the Fed?
Absolutely.
I see.
That is exactly what I'm saying.
I see. So we're watching all these big events happening, and it's almost like there's two giants fighting above the clouds that we don't see, and we just wake up like, why is that village decimated? Well, it got stepped on. And these big giants, these giant banks, the central bank versus the Fed, and they're
central banks are fighting it out for control of the world.
Oh, I see.
That's I like, dude. I wish I saw it. I mean, I know I like Reynolds heavy duty. Put on my tinfoil hat. Do my best Alex Jones impression. But like, the incentives all map. I'm not feeding you a story that doesn't against their best interest, their essential nature. Because I'm not.
Sorry, I'm just going, that line again?
Yeah, this is who they are. So why wouldn't you expect them to play this way? Because this is what I would do if I were them. I mean, if I was literally standing there looking at Klaus Schwab, the Vulcan, wanting to, destroy my primary business, and the main thing that separates, the United States from the rest of the world, rule of law, relative financial privacy, federated government, incredibly good and banking regulations, which drive deep liquidity, which drive this, which drive that, contract law, this, that, all these things that make us the envy of the world in terms of the ability to handle capital. And you want to just take that away? You want to just throw that away? And you're the steward of this system. You're the guy getting fat and happy off of it, making sure that it works, mostly. You think you're going to turn that over to Klaus Schwab, the friggin' bond villain?
Crazy.
I can tell you for a fact that Jerome Powell wanted to raise interest rates starting in last June. But he couldn't. He was up for the appointment.
I see. So basically, you think that he's going to keep raising because he's putting the screws on the central banks by doing that.
He is putting the screws. The people who are the most vulnerable to a rate shock here are the very people that are trying to destroy the Fed.
Crazy.
Their Achilles heel is higher interest rates.
So what do you see? I mean, do you think that we're going to see a collapse of these systems, these European banking systems? I mean, and
I am absolutely convinced of it. I think we're already in the middle of a European sovereign debt crisis, and Christine Lagarde is running around like the little Dutch boy, moving piles of money around every day, trying to keep this thing from collapsing. And the Democrats, basically stealing the midterms, and the coup that occurred in England against Liz Truss now allows for two things. It allows for everybody to believe that the Democrats are going to spend more money, which is going to put pressure on the dollar to the downside. Therefore, everybody should just start disgorging dollars and, spend some of those dollars that they've hoarded for the last year. And at the same time, the UK and the UK bond markets get to be used as piggy bank to prop up your European debt yields and the euro, which is exactly what's happening. And those two things together have gotten the euro from 96 cents back up to $1.04, and allowed Lagarde to maintain credit spreads and actually push them even lower than they've been between Germany and Italy, and to shore everything up. But all she's really done is bought herself about 4 months.
I see.
Maybe 6.
And so if the European banking system really collapses, what does that look like for the average person or the average, say, small, medium-sized business owner who's in Germany or Italy
In Europe?
now? Yeah.
They're already getting killed, but that's also their policy. They want to destroy Europe's middle class in order to have their big rebuild of society, but they want to do it on their terms and in their time frame. Again, if the Fed keeps raising aggressively, that will be on the Fed's timetable, not theirs.
I see.
Okay? And I mean, again, I don't know if the Fed's got the tools to get this done. I just can see what they're doing. Okay. And that's the key to understanding how this is all playing out. They bought themselves some time, but again, the Fed meets in the middle of December, and everything looks rosy right now that they've avoided the worst catastrophe. And if the Fed raises 75 basis points in December, credit markets are going to be massively mispriced. Massively. LIBOR will be massively mispriced. So and that rate shock is going to break it. And that rate shock's break a lot more of the things. I don't know what things, just I know that they're going to break a lot of the things.
So if the Fed keeps raising rates and the European banks can't sustain that, they start imploding and they start collapsing, what does this mean for the dollar?
Dollar goes immensely higher. The euro goes to 59 cents. The pound goes to 85 cents. The US dollar index goes to 150. US interest rates also rise rapidly. The US 10-year goes to 8 or 9%. Okay. It's not good for anybody in their current situation. A lot of things are going to break. But in order to, you can't turn gear, you can't let the gears start to go in the opposite direction, go into reverse without breaking a lot of things.
Yeah.
But you have to realize what the stakes are. The stakes are, you go through a couple of years worth of really bad times, or you doom your children and your grandchildren to living under a ridiculous, period of war, famine, death, destruction. And I'm still not saying we're going to even avoid even those things. It's just, what is that going to look like? And total surveillance? Because we have to remake the world in the image of Klaus Schwab? Really? And, really? You think so? I don't. They desperately need to destroy the United States as a political union to get this done. But first, they want to send the U.S. military overseas to get their asses kicked by Russia and China so that we can really destroy the United States. And by the way, destroy Russia and China at the same time. Like everybody goes, wee, and then the only ones left are the benighted Europeans. That's the game they're playing for. I don't think they're going to get there, but that's their game. That's their strategy. I know how to beat that strategy. I've got 18 different ways I can beat that strategy. I think it's dumb. But they're not going to stop because power makes you what? Stupid and paranoid. Yeah. And once you're down this dark path, forever will it dominate your destiny. And psychopaths do not back down. They double down until we take them off the board.
Yeah. That was a Yoda quote, right?
Yes. So, my wife and I, we spend all this time, like we talk in an endless series of movie quotes, but I use the pop culture references to really kind of drive home that there is a lot of truth in what we see. And those stories that we all love, they're metaphorically true for a deep and abiding reason. And, we can all look at them and go, oh yeah, now I get it. And I can get away from all this esoteric stuff about credit spreads and currency arbitrage and all this shit. Like most that I barely even understand. I mean, I tell people all the time, I LARP as a bond guy. I LARP as so well that some people actually think I'm an ex-commodities trader. It's kind of really funny, actually. And because I'm an ex-chemist, like, I'm just a dude with an inquisitive mind and, a big mouth, like, and willing to talk. But to bring it back down to, if I can give you the one quote or the one thing that everybo's seen, they go, oh yeah, no, I get you. Yeah. And that really helps to, like, give you the glue.
Here's the big question that I have with this is that right now we're looking at this. They're really, really trying to advance this central bank digital currency. And so the question that I have is and look, like, I've studied China extensively. I know what their social credit system looks like, how frightening that is, right? If you want an example of what it looks like, go look there, where, and that's a whole different story. But so is the idea of the central bank currency, digital currency, CBDC, is that coming from the European central banks as this effort to replace their system, which they know is on its way out? And because you see that within our government, like Biden, for instance, he's pushing forward that. So it was, as a puppet of that.
Yeah, the Biden administration is absolutely a Davos creation and a Davos organization. It's very clear. So what they will do is try and backdoor as much of the CBDC at the retail level as possible. So UBI, MMT, the UBI, expanded unemployment benefits, expanded EBT cards, stuff like that. So that you already get all these people on the dole to the point where you can just, we're just going to move your account from your own bank account to the one with the Federal Reserve. But the Fed is not down with this. Okay, and I want to question, and I know there's going to be people going, well, yeah, but I just heard yesterday that the Fed's like trying out this new pilot program with the major banks. Like, yeah, it's all the bank stuff. There's a fundamental difference between a wholesale digital currency and a retail central bank digital currency. The one you should be scared of is the retail level central bank digital currency. The wholesale one is just a replacement for SWIFT. The interbank markets need a better system than SWIFT. SWIFT is antiquated and stupid and dumb, and it's too much friction and it costs too much to run. And it's, by the way, going to get its lunch eaten in 15 or 20 years by Bitcoin anyway. If they don't come up with something to beat it, because Bitcoin's going to beat them in the long run, or something like Bitcoin, or an amalgam or a consortium of good, honest, proof of work style Bitcoin style coins that, provide the world with enough liquidity to get what needs to be done. Bitcoin maxis can fight me on this, bro, all they want, until Bitcoin actually operates in a world without central banks. We don't know what the future holds. You can be right, I can be wrong. I can be right, you can be wrong. Doesn't matter. We can argue. I'm not going to argue about how many angels can dance on the head of a pin when I'm living in a world where central banks are literally trying to turn us into debt serfs tied to our land, because we're not allowed to own a car because we said something mean about Klaus Schwab on Twitter. Fuck that. I'm not living in that world, and I'm not going to have those are asinine arguments I don't give a shit about. Let's not have them. I think that's part of the reason why I no longer write for Bitcoin Magazine, but I don't know. Maybe it's because I was too expensive. I don't know, whatever. Doesn't matter. So the reality here is that there's a need for an overhaul of the wholesale money market system for clearing payments between banks and between banks and central banks. That clearly needs to happen. And, whether or not that's, what that looks like is one thing. It's fine. I'm not fearful of that. I don't believe in the slippery slope argument for that one. Because again, why would the Fed want a central bank digital currency and cut out and against the will of the people who actually own the Federal Reserve? It doesn't make any sense.
I see.
JP Morgan doesn't want that, because JP Morgan doesn't make any money off of that. JP Morgan doesn't exist with that in that system. The Fed exists.
Exactly. Yeah, exactly.
And honestly, if you listen carefully to people who are close to the Fed, and you listen to people who are in the banking system, and you actually listen to podcasts, where the heads of the major New York banks actually sit and chat with each other at these symposia, and they all say the same damn thing. They're like, we need to get back to a world where the banks set the risk premia for investment in the marketplace, and we have to get the central bank out of doing that job that it's not designed to do. Now, Powell agrees with that. Yellen didn't when she was in charge. And Bernanke certainly didn't agree with that when he was in charge. So you clearly, by their actions, just go, they're in the Davos camp.
I see.
How can we destroy the United States? By destroying the structure of its capital markets. And the capital markets in the United States are going, you know what? No. It's not hard. It's not hard. It's just everybody has to get rid of their bias against their natural tendency now to hate, to be fearful of all institutions. Like I'm not saying that the Fed is a good guy here. I'm not saying that Jamie Dimon is all of a sudden, born again hard or anything. I'm not saying any of that. Like, but let's beat Klaus Schwab. Let's get rid of the techno commies in Europe. And then we can reform the Fed and the banking system and everything else. We'll take them on later. Let's deal with the enemy at hand.
Yeah.
Let's get away from all this nonsense about climate change so that I can, still buy a car with a manual transmission because I'm an old fuddy-duddy and I like rowing gears and I like internal combustion engines and I don't like lithium mines, scarring the landscape.
Yeah.
Because like it or not, oil wells take up, the same amount of room as my pump does, as opposed to county. This is dumb. Like you like the environment so much? Well, come on, man.
Yeah. Gosh, well, there's a lot to unpack here, a lot to think about. But am I correct in my assessment that you feel like the central bank digital currency will fail, and that the central banks don't have enough time left? The time has been too accelerated. They're not going to be able to get this plan out, though they're pushing for it, that ultimately they're going to collapse. We're going to have a difficult time in the wake of that collapse and amidst that collapse, because it does affect us. But that fundamentally, if we can hunker down and get through it, we're going to enter into a future without the tentacles of the central banks.
And when you have Martin on, this is actually something I would, if I've ever had the balls to ask Martin to come on my podcast, but because I don't know. Yeah, Martin on, what we should talk to him about is, because he's, made the prediction, Socrates made the prediction that China will be the world's destination for global capital come 10 years from now, less than 10 years from now, because we're almost into 2023. The West will collapse. The interesting part about that is no one's asking this question, is that what's going to be the impetus for that to happen? Is it just that the West collapses? Or is it the end of the CCP, which actually then makes China a better destination for global capital? Because right now, under the CCP, under Xi, it's not.
It's interesting.
I'm looking at that prediction, and I've been thinking about this for a long time now. And it's a question I put out there. I'm not disagreeing. I can, I look at the Socrates prediction and I go, yeah, I can see a through line to that. That's a pretty high probability event, even if I don't believe in Socrates. I find Socrates interesting. I'm not sure that I agree with it all, but I'm willing to enter it into my field of data and incorporate it and look at it and assess it for what it is, and think about some of the things that are popping out of it. And, oh, I can see this.
It's so interesting you say that.
Why? What would be the catalyst? It could be that the China we know today, which is just as unstable as the West is, actually doesn't survive, but they go in the opposite direction. Maybe is 10 years enough time for that? 9 years enough time for that to happen? I don't know.
Yeah,
but it's just something we should really. It's an open-ended question about what the catalyst is, because one of the things that I first, and I'll leave you with this because I need to get going soon. When I first identified the moment at which I thought Powell was off the reservation, which was when he raised the reverse repo rate by 5 basis points last June, which then set the euro which killed the euro bull market and started the whole process. And I said, and I figured out by early July, I started coining the term stealth tightening. The Powell was tightening the monetary supply of dollars, was tightening the global supply of dollars through the use of the reverse repo facility by draining all of these dollars from the global markets. Doesn't matter what the interest rate is. What matters is that there's no dollars. What they didn't have was the catalyst for how this thing was actually going to work. And that's when SOFR became the SOFR versus LIBOR argument became the mechanism by which Powell and the New York banks could pull this off. I was missing that thing. It's like the underpants known from South Park. Steal underpants, ... profit. Raise interest rate, or stealth tighten, ... kill the ECB. Implement SOFR, break the collateral chain between the US and Europe. And now it makes sense. And that didn't come to me until February. So this has been a journey for me as well as everybody else. And I've been doing this in real time and asking people to help me figure this out, because I knew I didn't have the whole story. And I knew that if I put it out into the zeitgeist for people to chew on and tell me that I was crazy, eventually someone would say, no, you're not. And here's how. Give you a perfect example of what I'm talking about. The original article that I put out detailing SOFR versus LIBOR, Zero Hedge would not pick up. Every once in a while, Zero Hedge does not pick up one of my articles. They usually pick up everything. That was the first one they hadn't picked up in over a year because they fundamentally didn't agree with it. Now, why did they not agree with it? Because maybe it was too far out there. Maybe it was just too far outside their frame of reference or whatever. This is not a slight against Zero Hedge at all. It's just an observation. I owe a huge debt of gratitude to the guys over Zero Hedge. What I would never badmouth in that respect. Never in a million years. I'm just saying, you note data points. Okay. But then since then, as this has gotten, more play and it's gotten more traction and it's become more real, now they scrape those articles. Great, cool. I've convinced them. I consider that actually a win. Yeah. I didn't consider the original one a loss, right? Because that would be churlish. I don't have a relationship with them. It is what it is. So, it's like everybody has to go through their own kind of process of being convinced and their own kind of Kubler-Ross 5 stages of grief over whatever it is that their unassailable shibboleth is. And here we go. And they've been arguing, FRA OIS. They've been arguing the FRA OIS rate as the big thing. I'm like, it's not as important an indicator anymore in the world of SOFR because the LIBOR rate doesn't matter as much. So, there you go.
One final point is that you mentioned China, and I have through the work I used to do with the media, I have a lot of contacts that are very, very well connected at the high levels of the CCP, and so there's a lot of information that I just get that I don't talk about too publicly. But one thing that I have come to understand, and it's a part of it is a feeling and a gut feeling, but it's also piecing together a lot of different things. Is that the CCP will collapse soon within the next couple of years. Like it's almost inevitable that the CCP will collapse, but that what arises in China after that will become the new center of civilization, basically. That it's interesting hearing you say that, because even before this conversation, that's what the information I've been getting, and that's the picture I've formed, that China will become the center, but it won't be the CCP. And it's just interesting how looking at what's happening right now lays the foundation for that. Now, again, who knows, right?
Yeah, who knows? But it's really interesting, and I appreciate that stuff. That's really cool. So I'm gonna have to run though because I'm on my. I didn't plug my laptop in when we started, and it's about to die.
Okay.
So
great.
Happy to do this again. Again at some point in the future. Happy to pick this conversation up in the future again. If you want to have me on, I'll be happy to do so. Just sometime during the holiday, between now and the end of the year. Because I'm swamped between now and
That's
the
okay.
beginning of December. So,
Tom, where can people follow you?
Sure, you can follow me on my Twitter at TFL1728. You can follow me on my blog at tomluongo.me. And then, of course, you can sign up for the Patreon at patreon.com/goldgoatsandguns. By the way, all the media that I do, that I get the links to, I put in as public posts on my Patreon feed, so that you can review all of them there, even if you're not a patron. But if you want to become a patron, you can go right ahead and do so. I always welcome new people. And that's where you can sign up for the newsletter, which has a portfolio strategy and all unique content. But as well, as far as everything else as well, you can just follow me on Patreon without becoming a patron if you want to get all the media in one place. And I do that as a means by which to help you decide whether or not you want to become a patron. Because the easiest way is just listen to me, swear into a microphone and, camera. And
smoke cigars.
You can figure out whether or not I'm full of shit or not, right? So,
Great.
There you go.
Well, Tom, thank you so much for spending this time with me. I really appreciate it. Great conversation. And I really look forward to next time. I'll make sure I'll send this over to you after we're done and it's up. And we'll go from there. So thanks for being here.
Excellent. Thank you, Seth. You have a great day now. Enjoy.
Take
Bye-bye.
care. Folks, I've got a very important question for you. Is Biden keeping you up at night? Are you tossing and turning, having nightmares about inflation, the southern invasion, diesel shortages, food shortages, Hunter Biden's laptop, and the Marxist takeover of our country? Well, have I got the solution for you. When you invest in a set of beautiful Giza cotton sheets from MyPillow, not only will you get a good night's sleep, but you'll send a clear message to all the globalists that they can't rob you of your dreams anymore. Instead of rolling around on cheap, sweaty sheets made in a Chinese slave factory for woke companies who turn their backs on the American people, you'll rest easy knowing every one of your hard-earned dollars is supporting American jobs and American patriots like Mike Lindell and Man in America. And it's not just sheets. Mike Lindell has truly mastered the art of war and comfort, arming American patriots with slippers and pillows and even a dog bed for Barky. Because, folks, even in the grips of war, who says we can't be soft and snuggly? But wait, there's more. Just watch your liberal friends and family squirm this Christmas when you give them some cozy flannel pajamas from America's most patriotic pillow salesman. And with skyrocketing energy costs, they'll have to choose between virtue signaling or freezing. MyPillow products are truly the gift that keeps on giving. Mike Lindell is sticking it to the woke companies who refuse to sell his products by cutting out the middleman and passing the savings directly to you. So head on over to mypillow.com and save up to 66% when you use the promo code MAN. Remember that word, MAN, for Man in America. Or you can also call 1-800-985-8966. That's 1-800-985-8966. Or mypillow.com with promo code MAN. So folks, go get your MyPillow products today.